Well, let's try and figure this out. I want to understand this from an M&A point of view. I want to understand this from an investor point of view. Basically, our question of the day is big tech too big to do big deals? And I think we need to try and get an answer to that question, because we've got to figure out how these companies are going to grow. What kind of an M&A environment are we going to be looking at? Is AI, as Kaylee says, maybe the place to go? Jennifer Wright joining us now, Bloomberg Intelligence Senior Analyst for Antitrust Litigation. Jennifer, I'm going to start with you and try and understand why this deal has been blocked. Is the Activision Blizzard deal dead from a Microsoft point of view? And what does that mean for the rest of big tech?
You know, it very well may be. The companies can continue to fight this. You know, they can go to court, both in the U.S. and in the U.K., but we're talking years before they might have a resolution. And they have a July end date this year in their purchase agreement, so obviously would mean that it would require some sort of an extension. And I'm not so sure a deal can hold together for 2, 3, 4 years. This has already been pending for 15 months. So, you know, this is problematic for the companies, and they're going to have to decide if it's really worth going forward and fighting for this deal, spending that time and that money where they really don't know how it's all going to end up, or whether it's time to abandon.
Well, and it raises a question of what kind of precedent this may set. I mean, Jen, do we live in a world in which big tech companies, when making acquisitions, are guilty until proven innocent? Guilty, that is, of violating antitrust and competition concerns?
You know, sadly, it shouldn't be that way, but I think you're exactly right. I think it's going to be much harder. It already has been in the last year, much harder for many companies to do deals, particularly big tech and big tech platforms. And I think that's going to continue. I mean, we've seen really aggressive enforcement in the U.S. We're seeing this really aggressive enforcement in the U.K., which, by the way, is a brand new burden ever since Brexit for these companies, because the U.K. used to be much more rolled into what the European Commission did. So you now have 3, if you think of China, 4 big regulators that could step in and block a deal. And you have both the U.K. and the U.S. really antagonistic toward deal making by big tech companies, even now trying to unwind past deals that have been done, like Facebook, Instagram. So I think it's going to be a very challenging environment going forward.
All right. Well, certainly challenging for the stock of Activision Blizzard today. Right now, it is down about 9%. Microsoft, for its part, up about 7%. Thank you very much to Jennifer Wright of Bloomberg Intelligence. And let's stick with this big tech story, because we also have earnings to talk about. Meta is set to report after the bell today, and that is, of course, amid an onslaught of tech heavyweights reporting within this week and going forward as well. Of course, Bloomberg's technology co-host Ed Ludlow is joining us now with more. So already, Ed, we had beats from Alphabet and a beat from Microsoft, but it feels like the earnings maybe aren't ultimately what matters today. What's your read?
Yeah, look, it was a battle of AI, right? And investors, listened to the Microsoft story around AI and what they had to say about how it will change their business, and listened to Alphabet, and using the share performance as a proxy, they liked Microsoft's story better. I think what's so interesting here, you guys mentioned the lack of macro. I would say macro is kind of at the heart of this story. Both of them beating on the top and bottom line, but cloud continues to be a driver of growth. So if you take Microsoft as an example, top line growth overall of 7%. The era of double digits growth is over at Microsoft, but at Azure, the cloud unit, they're still growing at 33% on the top line, and that's helping boost EPS. I think EPS in Microsoft's case coming in at $2.45 a share. Then you look at the other side of the story, Guy, which is like, well, there was no evidence that Alphabet and the core Google search business was impacted by any of this AI battle at all.
Ed, can I just get your take on Activision as well, and how this rolls into the story? In some ways, the Activision deal was a meta deal. It was about the metaverse. It was cloud gaming. Ultimately, that was the direction to travel. These results felt like they were about AI, and that's where the real focus was. Is that why we're maybe not getting such a big reaction to the fact that this deal is going through? Maybe the market's already moved past meta and has moved on to AI.
Yeah, I mean, in any M&A situation, you use share reaction as a soft proxy for investor sentiment on what's going to happen. And so interesting that Microsoft held its gains relating to earnings confidence, while Activision fell significantly, right? Double digits. Jen was talking there about the July deadline. We knew that in the event the CMA came with a block, it would be immediately appealed by Microsoft and Activision. That is what's happened. The CMA's principal argument is that they see the merger of the two impacting pricing, raising prices for gamers, that is something that actually Activision and Microsoft have pushed back against. I think that the key point to watch is the CMA rejecting the offer from Microsoft and Activision to make Call of Duty, as an example, available to industry competitors and peers. We need to hear more from Microsoft and Activision about what the next step or the next offering might be. But yeah, the story from Microsoft, the emphasis on the call was around AI and search gains. But go back to the cloud guy. What we really want to have some more info on is how is AI driving Azure cloud sales, because that's a market dominated by AWS.